Hi there folks, hopefully you are well. We have got a real special treat for you again this week. Well, it's special for me anyway. Basically takes me back in time to the days I spent on the trading floors in the City of London. It's the Floor Trader Pivot Points. Now we've also got a downloadable cheat sheet with this video, so you can download it, print it off, get it laminated, stick it in your library of content that we're dishing out here on the channel. Before you do download the cheat sheet, make sure you watch the video, then it will all make a lot more sense. Come on, let's get to it. You may ask yourself, why is he dressed like an ice cream seller? Well, that may be the case, but this is my floor trading jacket. I started my trading career, for those that don't know, back in the wild 80s in the trading pits in the City of London. There I was on the trading floor, shouting, screaming, buying and selling literally hundreds of thousands of dollars on a daily basis. Back in the day, we didn't have all the technical indicators, the technical tools that we have today, the MACDs and Bollinger Bands and RSIs and all that. We didn't have any of all that. All we had there basically was our mouths, our ears, our eyes, hands, and the good old-fashioned calculator. And that's basically how these pivot points were developed. It enabled traders on the floor to have levels of support and resistance just by using a good old-fashioned calculator, based pretty much on what happened the previous day. And these are called the pivot points. Now, you may have heard them called the floor trading pivot points. That's because we invented them. But since then, there has been the emergence of other ways that these are calculated. In particular, you've got the floor, which I've just spoken about. I've heard of the Woody, the Camilla, the Tom DeMarks, and the Fibonacci as well. Now, I don't actually use these ones myself. In fact, really the floor trading ones are the only ones that I think are that important. So let's just focus now on the floor trading pivot points. So you can see here, basically what these pivot points do is they plot potential support and resistance lines based on what happened in the previous day or the previous time period, whatever way you want to look at these. And it basically maps it out in terms of S1, which is support 1, support 2, support 3, and above you'll have the resistance 1, R1, R2, and R3, and in the middle you'd have the pivot line itself. Now I just want to talk to you briefly about how these are calculated. We literally calculated these with a pen and paper calculator in our trading floor, wrote them on our cards in the trading pits, and basically have them there with us all day long. But we had to work them out first. And basically it's a very simple calculation. I know some people don't want to get too involved in calculations, but I think it's important that you know the workings behind them when you are going to apply them to your own trading. Okay, so first off, you need to work out what the pivot is. The pivot is quite simply the average of the high, the low, and the close over the previous time period. So you add them all up, divide by 3, you get the average. That is your pivot point. That's the high, the low, and the close. So it puts weight to the closing price. So that's why we like to use the closing price in the pivot as opposed to just using the average of the high and the low. Now, once you have the pivot point, it's a good idea to work out the range. Well, we know what the range is. That's simply the difference between the high and the low in that given time period. It makes the further calculations a little bit easier once you know the range as well. So very simple calculations. Now let's get to the actual levels themselves. So R1, that's resistant line 1. It's basically 2 times the pivot minus the low. Very simple calculation. 2 times the pivot minus the low will give you this R line here. Resistance line 2 is basically the pivot plus the range. So the pivot is here, the range takes it up to R2. And R3, slightly more complicated on this. I must admit, we never used the R3 on the trading floor, but indeed it is quite a widely used level, so it's certainly worth putting it onto your charts as well if you're going to be using pivot points. R3 is the high plus 2 times the pivot minus the low. You can work it out there as well. Now, you don't really need to be working these out because it's all done for you these days, and I'm going to show you also where we can help you in that regard as well. And the support will be 2 times the pivot minus the high. That will be this line down here, S1. S2 is going to be the pivot minus the range. Okay, you can see where it's coming from now. And S3 is going to be low minus 2 times the high minus the pivot. So you work out that you get the high minus the pivot, times it by 2, and subtract that from the low. Now the thought is that these pivot points are going to basically contain price in the next period of trading, giving you ideas of where you can basically buy or sell, take profits, and so forth. So the idea is that the price is going to be contained, as I say, in that period. Now there are multiple ways that you can use pivot points, which are basically support and resistance lines, and I'm going to go through these now with you. First off, you can use them for take profit targets to scale out of a position. We're going to go through these, as I say, in more detail in a sec. Used for breakout entries, pretty much like any support and resistance lines really. You can use these in the same way. You can use these for entries for counter trend trades, for those reversal trades where markets come into a big level and want to turn back on themselves. So they are great for that. Again, if you use these in conjunction with other price action perhaps, or other support and resistance by looking back left of the chart, I always say you should be using technical indicators in conjunction with something else as well. Used for stop loss placement. A lot of traders, they struggle with stop loss. If you're struggling with stop loss, keep it simple. Just use potentially a price above or below the S1 or S2 or S3 or whatever it is, and used as a filter to keep you out of low risk reward trades. Basically, you don't want to be taking a trade straight into a key level of support or resistance, or one of these R1s or R2s or what have you. Okay, so let's look at these in more detail, and then we'll jump onto the charts and I'll show you real life chart examples. So here we have a chart. So once you see that at the end of the trading candle, the pivot points and levels will come in for the next day's trading. Now in this video, all I'm doing is looking at the R lines, the resistance lines. Of course, when you plug this into your trading platform, you'll see below the support lines as well, but it's too much going on the screen, so I just put it down to the R lines. So used to take profit targets to scale out of positions. A lot of traders like to scale out, not having one profit target, but exiting the trade at multiple different levels. Using these lines of R1, R2, R3 could be a way you want to do that. So as the market starts to trade up, you'd exit the trade there at R1, and that's where you take profit target 1 would be, and then obviously the market goes on again. Of course, it is a presentation, so clearly it's going to work because it's all cherry picked to work. TB2 could be there at R2, resistance 2, of course, and off we go again. And TP3 would be there at R3, giving you some good levels, some decent levels to pin your trades to, so they're not left to any uncertainty and so forth. A lot of people trading these days, I think, confuse themselves with so much ambiguity. If you have your rules laid out in front of you, there's your take profit target levels, maybe you have stops in there as well somewhere, then of course that takes out a lot of the emotional stress, which, as you know, is the biggest killer of most traders. So that's used for take profit targets to scale out of profitable positions. You can use these for entries, for counter trend and reversal. I think this is one of the common ways that people use support and resistance and these pivot points as well. So there you have the chart with the pivot points there. You've got the pivot down here, and you've got the R lines above, and off we go again. Okay, so now we're seeing the market's moving up. Okay, we hit R2, and we hit R2 again. This is what we call a double top. Maybe this is an indication that this wants to reverse back down on itself by respecting R2 as a potential turning point. Same at R1 or same at R3 as well. But again, that is obviously in your trading plan. So if you see certain price action happening at one of these levels, then maybe it's a time for the markets to reverse. So keep an eye on those entries. But again, I think you should use in conjunction with other price action or support and resistance by looking back left in the chart. The third way I want to talk about is used for breakouts and entries. You're often seen in trading that old resistance becomes support and old support becomes resistance once it's broken. Using these pivot points for entries with the trend can indeed be a useful way. So here we see the markets trading up, okay, and we take a breakout. Okay, so now we have a retest, possibly leading to a move to the upside. So we expect these lines to be respected. If they get breached and come back to retest, that could be your entry. It's really quite remarkable how these lines have been respected. Certainly when I was doing my research before this video today, I was actually quite amazed. I know they worked on the trading floor because everyone was using them, but it does seem to be quite powerful in terms of support and resistance. So using that for retest here on a buy trade would be a good potential entry, but again, in your trading plan. And off it goes to the top, of course. Right, used for stop placement as well. As I said a moment ago, a lot of traders, they struggle with stop placement. So if you were to put into your strategy, certainly into your back testing, that you're going to place your stops below a pivot point, be it the pivot itself or one of the other R1s or S1s or so forth, then that could be a way. So basically there you might have a buy trade there and the break of R1. Hoping for it to continue up. That's the breakout retest trade. And if you're wrong, of course, you need to get stopped out. You might want to place your stop below the next pivot point below, which in this example would be the actual pivot itself. That will create an established risk amount so that you're not going to be risking your whole account on a trade. You should always be using stops in the trade. Use as a filter to keep out of low risk reward trades. I think it's really powerful to use these key levels of support and resistance to increase your probability, to get your win-loss ratio up. If your profit target or your potential profit target is the other side of a key level of S1 or R1 or R2, R3 or whatever it is, if your profit target is there, maybe you want to keep out of that trade and just wait for the next one. Traders are often compelled always to be in a trade to the detriment of their win-loss ratio. Maybe that's something you want to put in, a filter. Don't take the trade if it's through a key level of support or resistance, which can be depicted by using these pivot points. So they're basically the 5 ways that I think you can use pivot points in your trading. I certainly think it's worthwhile you doing some research on them. What I'll do now is I'll jump onto the screens, show you what it looks like on a real chart, and I think you'll be pleasantly surprised to how powerful these are. Come on, let's go. Okay, so let's have a quick look then at our pivot point calculator. Now you can access this by going to the link in the description tab. It will take you directly to this page. It gives a brief description of what the pivot calculator does. If you scroll on down, you'll see the different forms of pivot analysis. You've got the standard floor. I've already discussed that on the interactive board. You've got the Woody, the Camarilla, the Tom DeMarks, the Fibonacci. If you go to the right, you'll see the formulas as well that pertains to those different pivot calculations. And here is the actual calculator. I'll just leave these in at default settings. You'll see here that the default setting is the high, the low, the close, as we discussed, but it also gives you the open as well, because some of the other forms of pivot analysis does use the open. The floor trader pivots do not. But again, if you want to use the others, you can input it in here. I'll just use these as the default. If you hit calculate, then of course, these will be your levels. So you can take these levels, plot them on your charts for the next day's price action. And you've got the Woody, Camarilla, DeMark, Fibonacci as well. I suppose if all these can confirm with each other, they may even add to more power behind them. But I'm only interested in the floor levels here. So you just mark these onto your chart depending on what platform you are using. Okay, so now let's have a look at a price chart and see how price has reacted to these pivot points. Now, depending on what platform you're using, some have the pivot point calculator preloaded, others do not. MT4, MT5 does not, but you can locate them elsewhere and load them up should you wish to. Or of course, you can use the pivot point calculator and just plot them manually yourself, which I actually think is quite a good idea. So what we've done here, I've loaded up an indicator and it shows me all the levels in previous days. And it's working out on previous days price action. Previous days, high, low and close, plotting the levels for today. I'm going to scroll back. I haven't cherry picked these. Some will work, some not, but I want to show you how they look on a chart. So here today, for example, time of recording, Thursday here, we've had an opening slightly above the pivot. We trade down into the pivot and we are respecting pivot for now. This is a live chart, as I say. It's moving in real time. Let's have a look here at the previous day. So the previous day we opened here just about the pivot point. we moved all the way up to R1, where we spent much of the day, and then we broke up through R2, and then back to test R2 with this pin bar. That is your trend continuation trade right there, respecting R2 on the way down. That's the breakout, retest and continuation. Let's have a look at the previous day. So the previous day we open here, we move quickly up to R1 and then back down, pivot point holds, and then back up to R1 again. And the previous day we open up here just below the pivot point, again moving up to the pivot point where it holds, then rolls back with this bearish pattern here, straight back down to S1, and then reverses back up again to the pivot where it holds for a while, and then breaks out again up to R1 where it bounces off and comes back down. Let's have a look at the previous day. So here's the pivot point. We open up well below the pivot point, moves back down into S1, bounces off it initially, and then back down to S1, breaks through, back up to retest, and moves back down again. Again, that's your breakout, your retest and trend continuation. And we can go back in time. As I say, this is the Aussie yen. Let me pull up another chart. Okay, so this is the Euro Yen live real-time charts as well. At the moment, we just seem to be hovering around the daily pivot from yesterday. Not much going on there. Looking back at yesterday, we opened up pretty much at yesterday's pivot, traded straight up to R1 and stayed around R1 for pretty much most of the day. Then broke up through to R2. Didn't really respect R2 on the way up, although did respect it on the way down. And the previous day, not very much going on there, quite a tight range. You see this day here, we respected support 2 down here, which led to that big V-shaped reversal. See quite often when you're doing your own analysis how R2 the following day seems to contain price. Maybe this is something you can work with. Okay, so I hope you found that useful. Certainly gives you something to think about, something to go away and research. Now, as I said, this does come with one of our special downloadable cheat sheets that you can print off, get laminated, stick it on your desk, stick it in your file with all the library of content that we're putting out here. We've got quite a few cheat sheets out there now. Well worthwhile keeping them safe and easy at hand. If you like the video, give me a thumbs up. If you didn't, give me a thumbs down. Don't forget to leave me a comment. Let me know if you're using pivot points. Actually, let me know if you're using another version of the pivot points, not just the floor trader pivot points as well. I'd be interested to hear, because I've not had too much exposure on those myself. Don't forget now to subscribe to the channel if you don't already do so. That bell notification, well, you know the drill on that one. Don't forget to follow us on all the socials as well. And as you know, we are streaming live around the clock. If you want to take part in that, you can do so. Just register, hit the description tab below, takes you to where you want to go. And I'll see you there inside our live trading. It's absolutely free to attend for a week, see what you think, see what it's all about. If you don't want to stay, you don't have to. So that's not a problem. You've got nothing to lose. And I think everything to gain. And also when you do come in, let me know you've come in from this channel so that I can roll out the red carpet for you. Okay, I'll see you next week. Have a good week.